as things stand right now. Shreyas Atavar is portfolio manager at Atman Capital Management. He's joining us right now to take some questions. Shreyas, thanks very much for your time. Good to have you here. Shreyas, so I mean, you manage a portfolio management scheme. What exactly are you doing right now? What are your views on the market? And I mean, what do you expect 2021 to be anywhere close to what we've seen in terms of performance in 2020?
Well, those are all very good questions. In terms of our market outlook, obviously markets are forward-looking indicators, and they're to some extent pricing in an economic recovery of 8 to 10% in the following year. And if you just think about where market levels are, and if you just forget about COVID for a moment, markets are up 17% from their pre-COVID highs. So they're not too egregiously overvalued from that perspective, given that the economy is now normalizing. From a valuation perspective, obviously, 24 times FY23 earnings. So that's about fair. And I would say the liquidity from central banks, major central banks, assets are up 50% from pre-COVID levels. And we are seeing this fiscal spend come through from a lot of governments. Even the incoming Biden administration will be fiscally spending. So that should keep markets buoyant. So provided the economic recovery comes through, I think there is scope for especially for the broader markets outside the frontline indices to do well. And so that's where we would be looking to generate alpha.
So if you could give us some ideas, Shreyas, morning, this is Rima here, to generate alpha. Where do you still see value?
Well, it's a good question. We run a multi-cap product with typically 40% invested in large cap and the rest in mid and small cap. So where we do see value today is in the financial space. We like some of the lenders. We think some of the large frontline lenders have provisioned adequately, and they've also raised debt and equity capital in the last a few months. So as the capex cycle recovers, from this new PLI scheme and the lower taxes for new manufacturing units, I definitely think there'll be a top line driven growth, and that'll lead to operating leverage. So we like the financials. We like the industrials and consumer discretionary. We think they can grow at a multiple, at a higher multiple to the economy. So we definitely like that space. And we also like, within the consumer discretionary, we like auto OEMs. So we've liked two-wheeler companies for a while, given the tailwind of consumers preferring personal transport over sort of shared transport or public transport. So we've liked two-wheelers, and also lower interest rates helps financing schemes for two-wheeler purchases. So these are the areas we would look to. We think will do well in this year.
Shreyas, interesting thoughts there, and I wanted to sort of get into some of these in detail. We'll do that the next time you're on board.